All right. Well, everyone, thanks for jumping on. Greg, thanks for helping host with me this week as always.
Good to be here. How you doing, Hunter?
Good, good. How are you doing?
Good. And then Steve, good to see you again. Nikki, hi.
Yeah.
Hello.
So we're gonna run through some real estate news, and then you guys can kind of chime in on what your thoughts are on this. The kind of the headline that we're gonna kind of focus in on at the beginning is OpenDoor agrees to a $39 million settlement over investor lawsuit over pricing algorithm. Okay, so apparently the investors sued OpenDoor for their algorithm on their failed iBuyer program, and they lost a $39 million lawsuit. Has anyone any experience with working with OpenDoor back in the day?
Well, so one of the reasons I wanted to talk about this is I've had two buyers buy something through OpenDoor. This was 22 and 23, so a couple of years back. And it's a super fascinating model. Primarily the way that you present offers. I found it really unique. You had to basically go through their website, say that you had a client and kind of submit an offer through their website. You never really interacted with an agent or a broker. And obviously you can kind of put whatever you want to in the offer, but it was just a really unique process. I think both of those homes were sold, kind of net funds to the seller, or OpenDoor in this case was, one of them was a break even, the other one OpenDoor lost money compared to what they bought it for. And that's just the purchase price over a 6 month or 12-month, 18-month period, for them. And obviously they have holding costs and other things on the back end, but kind of funny, just my own experience working with clients, and just to see that their program obviously is not working out, and they've had a huge settlement payout over this. So yeah,
Are
not
they still in business, or they got acquired, didn't they?
they are still in business, at least in my market. They're not as heavy as they were. I saw there's an open door listing up the street from one of my other listings. So I know they do have some inventory, but I don't know that they're buying at the rate that they were buying years
Okay.
past. So maybe this is part of it. Maybe they're trying to go back and tweak their algorithm.
So I just typed this on Google AI, the Gemini. It says total net loss 2018 to first quarter 2025, approximately $3.646 billion.
Pretty bad.
Right. Google lost money on their wait.
No, open door. And
Open
then
door.
I just typed into Google AI, the Gemini,
Oh,
on how much money Open Door lost. And Google AI says it was 3.646 billion since 2018.
billion?
Billion. How much is a billion?
A lot of millions.
Is 1 billion 100 million? Or is it 1,000?
It's 1,000, right?
It's 1,000. Yeah.
1,000 million.
Yeah,
Holy smokes.
I feel like the model is really tough for Open Door because they're sending out offers on home. Let's take a house that's probably worth 300,000 in my market. I feel like Open Door probably makes an offer at an 85 to 90% just based on what I've seen. So they're buying it maybe 260, 270 in price. They're going to hold it for 6 months to a year. They'll have probably insurance cost, I would assume, maybe not, but and some sort of holding cost with their capital that they're buying. They've got turn costs to go in and make the home ready to show. They've got marketing costs to turn around and sell it, and then they're going to let it sit 3 months. Then it'll sell for 280. You know,
But they got rid of the real estate commission.
yep. Got
Okay, so that was interesting. I've shown open door houses. I've never made an offer on any of them. They're usually kind of beat up and overpriced, was my experience.
Yeah, they do tend to sit for a while, which I think is why if you have a buyer who's willing to play ball, that can be a benefit because now you can kind of negotiate really hard against open door and get a better result for your clients. So
Okay. So the next topic is NAR, National Association of Realtors, released their Metro Market Statistics Report. I'm going to try to share the screen and get your input on these. Share screen. All right, what do you see? Do you see the screen?
Yep.
Mm-hmm.
Which screen do you see?
Natural market statistics.
Okay, that's not what I'm seeing. Okay, so this one should be Greenville, Anderson, South Carolina. Is that what you're seeing?
Yep, I can see.
Yes.
So
Okay.
this is my market, FYI, just for everyone who's interested.
Yep. And then we'll pull other markets too. I just started with this one because I knew Hunter was in this market and can chime in. So monthly payment, housing affordability, and qualifying income. So NAR saying 84,000 qualifying income, and then monthly payment would be 1751. So the housing affordability index would be 106.6. So that's I believe the HAI is 106% of the income to qualify for the median house. The median household has 106% of the income to qualify for the median house, is how that number is calculated. Price to income ratio is 3.8, payment to income ratio is 23.7. Does this all seem to be about where you think it is, Hunter?
Yeah, this looks pretty accurate. I mean, without diving into the actual statistics, as far as age demographics, I would say 45 to 65 is pretty accurate. There's not, a whole lot of affordability in our market. It's continuing to increase in price point, and incomes are not rising as drastically. So,
Okay.
that 106.6, I would expect to continue to go up if you track this over a couple year period.
You mean incomes go up, so we should be at about 120% of household income, median household income to qualify for median house price. I look at the market as healthy right around 120, 130. Okay, so housing statistics. This is a different tab, median home price growth. First quarter 2015, 167,000. First quarter 338,200. Home equity gains per year. Holy smokes.
Now, part of this, for people who don't know my market as much, the upstate as a whole, probably back in early 2000s, right around the 2010 mark, started to bring in a lot of industry. So we have one of the largest BMW plants here in the country, a lot of big manufacturing growth, as well as really revitalizing our downtown area of Greenville. So Greenville, over the past 4 or 5 years, has been named like one of the best cities to move to for retirement or just to live. And we're on every national list as far as cities. So part of this is COVID numbers. Part of this is true supply and demand. People moving into our markets.
And it's all about the supply. So jobs create the demand, and then the supply. Here's a single permits within the last 12 months, going back to, it looks like 2002, as of January 2000, 6701. Probably not enough to account for the population growth. So you're not keeping up with building, is what it looks like without digging into the details. Economic conditions, this is going to talk about the jobs. This is your number of employees is growing. More employees means more demand for housing. I think it's 2.1 jobs creates a demand for one house. 1.5% job growth, 1.7% wage growth, 3.5% unemployment rate. Okay, so now I'm going to jump tabs. Does this share screen move over to Minneapolis St. Paul market now? Okay.
Yes.
So housing affordability is more affordable in Minneapolis St. Paul, 124 versus 106. Income ratio instead of 3.8 is 3.1. Payment income ratio is 19.4. Monthly payments 2127. Qualifying income would be 102,000. So housing's more affordable in Minneapolis
Does the
St. Paul.
124 represent, like, on a scale?
So Housing Affordability Index will be the median household income to afford the median priced house. So the higher the number, the more affordable it is. So this 124 is the median household has 124% of the income to qualify for the median house.
Okay.
And then we're kind of in that same bracket. Our economic conditions, we're about a population of 3 million, so just under 2 million have jobs. Then the rest will be kids or elderly or unemployed. 0.8% job growth. We're not growing. You're at what was it, 1.9? Almost 2% job growth, 1.8. Yeah, you're twice the growth that we're seeing, and you'll probably double that.
Yeah, but your wage growth is going to be higher than ours. So
Maybe. Oh, 3.4. What was your wage growth?
I think it was less. I think it was 1.9.
Okay. Housing statistics. Our median house price went from 207 to 388, and yours was 260, 270.
Our, I'd have to go back and look. Ours is closer to 360, I think is
Okay, we're not that far off, just bigger and smaller population.
Hey, Craig, real quick, is this data behind a paywall or is this
Nope.
public?
nar.realtor/research dash and dash statistics. I'll put it in the chat.
Yeah.
Housing dash statistics, metro market statistics.
Okay,
I
thank you.
just dropped that in there for everybody.
Oh, did you? So I don't need to do it? Okay. Is there any city you want to go through? We did Hunters in my city. Who wants to do their city?
Can you do Austin, Texas?
Funny you should ask because I had pulled that one up since that's ground zero, they say, for the crash, right?
Yep. We're ahead of the nation.
Number one.
We're the first one to experience that boom, post-COVID boom, right?
Okay.
First one to crash.
Okay, so your housing affordability index is 104.9.
Yeah, less affordable. That
That's expensive housing. Yep.
yeah.
And then price to income is 3.6, 22.6 payment to income ratio. You need 122,784 qualifying income. Your monthly payment would be 2558. You got younger buyers.
Mm.
So your younger people, it looks like, are making more money. You're kind of tech heavy there now, right?
Yep, we are.
Okay, well that's a good thing. Housing statistics, median home price growth. Yeah, you're almost 100,000 more expensive than my market.
Yep. That sounds about right.
Permit 16,000 or 14,980. Yeah, single family permits are just not keeping up. They did a lot of multifamily. I've got some theories on that we can get into. And then we did housing affordability. Okay. Are there any other cities we want to do?
I live in Stuart, Florida. Stuart. It's near
Stewart.
Palm Beach. It's near just north of Palm Beach and Jupiter.
Okay, so we're gonna go to what's the metro area that they normally go under?
That's a good question. I wonder if Palm Beach would be the nearest, like, not Miami.
Myrtle, Naples.
No, that's on the West Coast. I guess do Palm Beach, or yeah,
Palm Bay, Titusville?
no, it's definitely not Palm Bay or Titusville. Yeah, this is when I realized I live in such a small town.
Yeah, so some markets aren't on here, so you have to go to a
Right.
bigger market.
Yeah, so West Palm Beach isn't on there. That's weird. Palm
No.
Beach. No, it's not. Um, maybe Delray Beach. Oh, that's weird. Or I guess Miami's going to be totally different. That's where I'm originally from. So, oh wait, Port St. Lucie is on there, but I guess maybe you could try Port St. Lucie.
Is that close to you?
Yeah, it is close. It's just not a place I would want to invest in. I feel like it's
Okay.
overstated, but just I guess for the exercise.
Runaway. Housing Affordability Index, 82.4. So
Oh wow.
the
Yeah.
median household income is 82.4% of what it takes
Mhm.
to buy the median house.
Wow. Yeah. I feel like it's one of the top overpriced areas. I remember reading articles on that, and it's just, yeah, it's not a place I would want to invest in. But yeah, that's interesting. Huh. Well, definitely not going to buy anything there. Yeah.
All right, Steve, you were down in what market were you in again?
Jacksonville, Florida, please.
Jacksonville. That should be on here, right?
It's definitely on here. Yeah, I've been looking at it.
Oops. Oh, you opened it up?
Yeah, I'm going parallel to you here.
Okay,
So
what's
for
that look
the
like?
107.7 for HAI. So does that explain what that means again? Is that
The median
7.7% over?
household income.
Uh-huh.
So the median is 107% of the income to qualify for the median house. So the lower the number, the more unaffordable it is. In my estimation, my opinion is 120 to 130%, or 130 is healthy. That's where people can afford houses.
You got Jacksonville, North Carolina up.
Oh,
Yeah. I was like, why are your numbers different?
Mhm.
I saw Jacksonville. $107.7.
So how do we use this information to benefit us?
It's just kind of interesting to watch your market. So, one of the things on the housing affordability is if you believe everything has to revert to affordable, then you would say that this market's going to go down in value, or the income has to go up, or the interest rates have to drop, right? So you'd say that this is going to go back to 130, which is going to adjust that value. My argument, which I'll go into later, is that I don't think is true anymore. I believe it was true at one time, but I think we've kind of come off the rails. We stopped building single family homes, and we're going to look more like California. California, we've adopted a lot of their principles in how we develop land and how we do our building codes. So we've basically stopped building enough single family homes. And California has not had affordable housing in decades. So I think most of the nation's going to start looking like more and more like the California housing market. That's my theory. That's my thesis. We'll see where that goes.
Which page shows the permits being pulled?
The what?
Permits, like housing permits?
Oh, that should be how to use it. Housing statistics, housing construction,
Mhm.
single family permits within the last 12 months.
Steve, another way that I use this data is to kind of look at where the median price point is and say, okay, if this is not a very affordable market, do I want to be investing in homes that are above the median price point? And so I know for me, I made that decision. It was pretty much a hard no. So I picked affordable markets and I wanted to invest in housing that was below the median price point because I think it has a better chance of going up to the median price point. So if you buy $150,000 house and median's 300, there's probably a better chance that you're going to have appreciation than something that's 400,000 or 500,000, and you want that to keep going up. Unless you're dealing particularly in luxury real estate. But I think if you're looking at some sort of rental, single family rental, buy and hold long term, I would look at something that's in a somewhat affordable market or is trending toward affordability. And then also get something that's below the price point because odds are you could sell your house to your tenant in 5 years. If they're a good tenant, they qualify, and you could do a lot of different things.
Okay.
Okay, so now I'm gonna share another screen here, I think. Application screen. Okay, it's not the one I wanted to share. Young graduates are facing an employment crisis. Okay, that's separate. Are you seeing Logan Motoshami's total housing inventory? Housing Wire?
Not yet. Drop it in the chat for everybody.
Okay. Now are you, okay, I'm sharing the right screen now.
I can see it.
Now I can see there's a little tab here. I can see what I'm sharing. Okay, so this was source of National Association of Realtors. Um, this is housing inventory for sale. 2005, this was the run up. That was the start of the housing bubble. We built a lot of houses. And then we had crazy financing, and then it all came crashing down. Inventory has not climbed back up. So when the housing crash hit, the lenders stopped lending because they were taking back foreclosures. So they were trying to get rid of their dead weight, and they weren't giving new construction loans. So the building permits stopped. So during this 10-year span here, we weren't adding enough inventory. And then the only inventory that ended up being added since 2015 was multifamily. We had a lot of syndications going in, and we didn't add enough single family. So that's going to drive single family pricing higher.
Yeah, it's they always have those charts if you're like a day trader, it shows and I have absolutely zero knowledge on day trading, but it'll show some of those lines and graphs to say, okay, this stock is heading upwards, so it's going on the bull run or whatever it is. And I know Dan shares some of that with Super as well, but kind of reminds me of those charts. So I wonder at what point it's going to turn around and start going the other direction. How many more years, so to speak, we've got to kind of wait out before it's going to start.
Yeah.
So
Yeah, supply can't be added fast. So this is housing markets where active inventory has risen back above pre-pandemic 2019 levels are more likely to have seen home prices fall from the 2022 peak. Okay. So Austin's definitely going to be in
Yep.
here.
Definitely, yeah. We had the highest inventory since 14 years ago.
Wow. Yep. So then you're probably in here somewhere where, oh, here's Austin. You're way down here.
Yep.
Yeah, you're leading the nation.
Yep. Leading the nation to crash.
Yep. So the other way to look at this is the only way to get house prices affordable is to have a lot more inventory because that will bring prices down.
Yeah, it's still not affordable enough, right? We saw earlier.
Yep, it's still got a long ways to go. So then that's the thesis on it has to revert back to that median income, the Housing Affordability Index, before the house prices can grow again. My argument is you can't add enough supply in most of these markets. Texas is pretty easy to add supply into. They haven't adopted a lot of the energy standards, a lot of the land development practices. Like Minnesota, there's what they call smart growth. So they restrict how much housing can be added to the market. So it's an artificially contained market, which drives house prices up because they're trying to force high density housing. And that practice is adopted a lot through the country. So that's what's going to keep prices artificially high, where typically Florida and Texas allow you to go ahead and build. You can build on private septic and sewer. You can do community septic and sewers, which makes it easy to add a lot of supply, which keeps housing affordable.
What is one thing that you notice on that chart about the market sizes? I don't know if anyone else saw what I'm seeing. You have a lot of the smaller markets are typically above the line. Some of the bigger markets, for the most part, are below the line.
So is this where the national builders added too much supply?
I don't know.
Because they're probably going to stay out of those smaller markets.
Potentially. But I think from the investor point of view, you know, kind of taking off the agent hat, putting on your investor hat, maybe that's an opportunity to invest in housing, whether that's trying to, you know, build new construction in some of those smaller markets or just investing in housing in those markets. You know, so you're looking at the smaller ones like Syracuse. You know, I don't know a single person that's investing in New York, you know, particularly Syracuse, but I'm sure somebody's killing up there.
Could be, but you kind of have to look at the one thing I would look at in these markets is job growth. Jobs are going to create the demand for the housing. So that's what I would be looking for. I don't shop by price, I shop by demand. And then this is a survey of smaller builders showing the mood is almost back to the low experience during the COVID-19 pandemic. So this is Wells Fargo, HMI. This is the home builders index, their sentiment. Index of 50 or higher indicates a positive outlook. So it's pretty low. Next 6 months is still under. Present is under. Builder confidence is way low, and so is traffic of prospective buyers.
Has anyone seen builders offering crazy incentives right now?
Yeah, definitely in the Austin area. I think a few months ago they were offering like realtors, the 3% plus 5,000 in commission for every buyer they bring. Also, they're just giving away like a lot of upgrades and financing options and buying down interest rates, paying for closing costs.
I got an email yesterday from a national builder in our area. They were offering a 3.99 rate, so 3.99 rate. Now, the catch was it was a 7-year ARM, so
Okay.
probably wouldn't want to do a 7-year ARM, but they're at least willing to buy it down to 3.99 just to get the deal done. That was pretty unique.
7-year ARM, that's not bad. I mean, are interest rates going to drop in the next 7 years? I would suspect. Or are you going to move in the next 7 years? Probably.
Yeah.
Although I think the average now is 10, not 7. It used to be 7 years.
Well, even worst case scenario, if the ARM adjusts to the current rate that it is today in 7 years, you just got 7 years, great savings, on your payment.
Yeah.
Nothing else changed.
Okay, so that's what I have in the news. Who has anything else they want to share? Nothing, huh?
Maybe we phrase it a different way. What is everybody working on right now?
I'm working on finding deals that never pencil. One thing I do need help with is I just made it through the first few videos of the classroom, and I'm trying to build up not the first 90 days, putting all your listings in spreadsheet. Does anybody have a template, or do I got to recreate this thing? The use for that?
I'm not sure what you're saying. So you're going to track the stuff that you're penciling out so you can start to see a pattern. Is that what you're doing?
Yes, the first video in the series. Would you like me to show you a screenshot?
Yeah, I didn't watch that one.
Let's see if it'll let me drop it in the chat.
Yeah.
I screenshot what was on the screen there, so I'm either going to take the time and rebuild it or see if someone has one that I can scrape. But
I see.
I think it made sense for 400 people to be creating their own spreadsheet if we're all. Doesn't sound very efficient.
I would just go ahead and post if anyone's done this spreadsheet.
Yeah, I did. I just keep getting a bunch of smart ass comments like, "Hey, why don't you just reverse engineer it?" And I'm like, "Well, okay."
Thanks, Captain Obvious.
I'm just not gonna reply. That's not helpful. But I'm not gonna be that guy in the forum. But just a general question. If you don't, I can recreate this thing. I was just trying not to waste a half hour. I'd rather be putting deals into the spreadsheet.
I haven't gone through the videos there, and I didn't do this myself. So I don't know that I could provide much help other than I have my own kind of spreadsheet and I run it on a per deal basis. Um, I mean, just kind of taking a look at this thing. I mean, some of this is well, a lot of this is very good. I don't want to say it's not good, but it also doesn't necessarily take into account the full picture. So I have a spreadsheet. I'm happy to share it with you, but it takes into account appreciation, the tax benefits, principal pay downs, and things like that. So that helps me figure out if the deal is going to pencil beyond just pure cash flow.
Yeah, I'd rather just build off of, not have to keep adding columns, when I get halfway through this process, because I think the real take home is if you look on that screenshot there, I think his point was the yearly cash or the yield, trying to identify like, okay, a 3% yield, so I think he was saying, 1.5% is like a decent, it's just a basic deal. Anything, 3% or greater in the yield department, or I think he was saying 7. I'm not to rewatch it. I'm not sure how you guys measure that. My impression was that the yield was cash on cash return. I'm just not really sure.
Yeah, that's what it's looking like because it looks like it takes the monthly cash flow, multiplies it by 12 to get yearly, and then you take the yearly number, divide it by your total cash in, and then that's going to give you your yield.
Yeah, because the video is like, yeah, we're gonna give you a link to the spreadsheet, but there was no link to the spreadsheet. So thought
Yeah,
I'd just ask around.
yeah, I would say, I mean, from my experience, if you can find anything 7, 8% or better, jump all over it. I mean, as long as there's not any other red flags, those are typically good deals. Because normally you're not going to have that high of a cash on cash return on a deal. Um, Unless you're doing some sort of like crazy like RV park or boat storage. Like I have friends that do all different crazy things, and they have good cash flow, good cash on cash return. But generally speaking, if you're going to buy, a duplex, single family, triplex, you're not going to get crazy good um, yield numbers like that.
Yeah, I think anything over 6, I wouldn't do anything under 6. It's like I'd rather just put it in the money market, take zero risk.
Yeah, absolutely. No, that's good though. Thank you for sharing that. Yeah, I'm going to dive more into this screenshot. I'm trying to look at this right now while we're kind of talking here just to see if I can poke any holes in it or provide any other report with it.
I just copied and pasted it into Gemini and asked it to convert it to Excel. It can't do it to Excel, but it said it transferred it over to Google Docs. I don't know if it's going to work. I can send you the file. Can you open that one?
I'm going to try to open it. I tell you what, it is amazing what Gemini does. I've always been a chat GPT person, but as of recent, I've been going over to Gemini. It looks like I need access. Craig, do you want me to just try to request that, or do you want to maybe update the sharing permissions?
You might have to request it because I don't know how to update it.
I'll just do that.
I'm not been a Google fan, so I don't use Chrome, or I've kind of boycotted all their products for many years. But I'm just playing with their AI just because I figured they're kind of cutting edge on it right now.
All right, I requested it, so you should have an email from me.
There you are. You got one from you too, Steve. I think.
Yeah, seems like every deal I've been able to really pencil in lately, can't get over $100 cash flow on it. So trying to figure out, the next move on how much lower can I write the offer for, you know. I think we're just kind of in that position. I think we gotta get these realtors used to bringing the real facts back to their sellers. It's everyone's still thinking it's COVID pricing, and there's got to be somewhere in between to make anything work. If anything's going to move, is basically what I'm finding.
The trick is you got to find the motivated seller. And to get a motivated seller, you're going to have problems. You're going to have either condition, or you're going to have some sort of legal battle. You're going to have some ball of mess that you're going to have to solve their problem for to get that kind of pricing right now.
Mm-hmm.
Or it's going to be the market condition like Austin.
Yep.
But even Austin, even though it's a tough market, it's still way overpriced. And I bet you, Denise, you don't see a lot of things pencil there yet, do you?
For investors,
Yeah.
I actually bought about 2 houses last year in Austin. One is a seller finance deal. I got a 4.5% interest rate for 2 years. It's a balloon payment. I got to refinance next March. So I'm counting on the interest rate dropping. Probably not at the 4.5% level, but it'll be lower than the 7.5 right now.
Yeah.
And then my other house I bought is from a builder, which I got a really good deal. And then cash flowing on both houses.
That's great. I love to hear seller finance deals. I mean, that's kind of primarily what I do. So I love that you're attacking those seller finance deals.
Yeah, I was just really lucky on that one. I mean, I noticed that house is near my neighborhood, and it was on the market for 6 months. So I just talked to the listing agent. Hey, is the seller waiting to do, owner financing, right? And she just agreed to it. And that was the first house ever I asked for owner financing. So it was beginner's luck.
Well, I bet when you get close to your balloon date, you can go back to the seller and try to renegotiate for basically an extension, whether you pay a higher rate now or you pay a fee up front to do that, or maybe they're just nice and they'll let you extend it, just because.
That's a good idea. Yeah, because I'm concerned that once I refi at 2026, like March 2026, my rate will be higher and I might not cash flow as much. So yeah, I might ask them. The seller is in her 80s, very old lady, right? Her son is managing the whole thing. I think the son is motivated to get some cash from the deal. Yeah.
Well, if he's smart, he will let his mom pass, and then he'll collect the note at basically the basis for whatever the face value of it is. So he won't owe any taxes, and then he can look to liquidate one way or the other. Otherwise, the mom or he is going to owe a ton of taxes, I would assume.
Okay, if I pay it off, then the mom has the property to the son, and he has to pay like state taxes, right? Something like that.
Yeah. So basically, when you pass, you can will all of your properties and assets to your beneficiaries, and then they get it at a stepped up basis. So the real conversation is about the basis. So I don't know what the seller has into it, versus what they sold it at. Was it their primary? Did they qualify for some other tax exemptions that I'm not aware of? But just scratching the surface, that's normally something people don't consider. So ideally the mom wants to die still owning the property or the mortgage, and then when it goes through probate or just gets directly passed on to the heirs, whoever owns it now is going to own that piece of real estate or that mortgage at the basis that you sold it for or bought it from. Right? So there's basically no taxes that are owed, and I'm very much generalizing this, but hopefully that helps you in conversation. With
I'm not 100% getting it. Yeah, if you can message me, that'd be great.
Sure.
I don't want to take everybody's time on this.
That's okay. I'll send you a message.
Thank you. Yeah, so another strategy I have with my 2 rentals I bought last year was doing furnished rental. So they're both midterm rentals, right? So I'm cash flowing for the 3-bedroom. I'm cash flowing $1,000 a month, and then the 5-bedroom I'm cash flowing $2,000 a month right now. So they both worked out really well. So Austin is one of the top 10 cities that have really high demand for furnished midterm rentals right now. Taking advantage of that.
Steve, that didn't copy and paste in there, so I updated and I sent you a link. I don't have Google Sheets. Maybe you can copy and follow the instructions.
Any other questions? Anything anyone else wants to talk about? Nikki, what are any projects that you're working on? Anything that you'd want to share?
Yeah, so I'm having the same problem that Steve is as far as finding a cash flowing property. I'm still looking to buy my first investment property, and I wanted to keep it in Florida, either the West Coast or the East Coast. So definitely we are now in a buyer's market. So disrespectful offers are, I think, would be accepted now, honestly, because there are a lot of motivated sellers. But I can't count on the short term or midterm rentals because of everything that's happening with like the Airbnb kind of crisis here. So there's just so much competition, and the biggest problem here is insurance. Like our insurance is so expensive that between insurance and taxes, since I'll be financing most of the property, even with the disrespectful offer, it's just not making sense. So that's why I'm just being patient to continue to let the market drop, and then just finding the right opportunity, the unicorn that I'm looking for. So, but I am also a realtor, so I'm focusing on that more so to get more capital. So that way I can have more cash because I think that's the key is to have more cash to invest to make the numbers balance the numbers. So that's where I'm at.
No, that's great. I appreciate you sharing.
Yeah.
Yeah, it's always difficult to try to find find a cash flowing property. I think Craig kind of hit the nail on the head earlier when it's you essentially got to find the motivated seller.
Right.
It's how do you prioritize time and effort to kind of sift through
Mm-hmm.
markets you're looking in, your buy box, so to speak, which obviously is what Zuber talks about.
Right.
So I got Jacksonville pulled up in my Zillow search. I typically search on Zillow. It's just easier for me than other platforms.
Mm-hmm.
Got it narrowed down to single family homes, and I've got it narrowed down to homes that are under 250. I kind of wanted to be
Mm-hmm.
a price point and above, and basically 3 bedrooms or above. And there's 800 homes that are on the market right now, and I've kind of got it sorted newest to oldest. And granted, you don't have to take my advice, but if it were me, I would try to go find the oldest properties and call those agents and start making offers. And I'm trying
Mm-hmm.
to pull this one right now, so I'm going to try to share my screen in a second. But you just got to find the motivated seller, and it's probably a painful process of having lots of conversations. But I'm sure
Right.
you can find the right property with the right seller who's willing to play ball.
Yep. Yeah, I know. I just don't want to make a mistake. So that's why I'm like, I really want to buy multifamily. That's what I've been kind of my buy box is multifamily. Or at least like a home with a ADU, like some kind of cottage, or so at least I can collect two rents. So there's not a huge inventory like 800 in Jacksonville. That would actually, I think, be more confusing maybe if there's such a big inventory. But I don't know. I guess it has its perks.
For sure. Yeah,
Yeah.
and that's I think the importance of a buy box. And granted, this is not my market at all. I just simply pulled up Zillow and I'm kind of searching. But
Mhm.
I'm what page am I on? I'm on page 13. So some of these are pretty old, but
Mhm.
here's a house that's a 3-2 for 140,000.
Right.
Here's one for 200,000, one for 95. And I'm sure somebody who knows the market could tell me, oh, these are good areas, these are bad areas. You're not going to get much rent for that. But let's just find something like this. This is a nice looking house. 240 is the price. Let's see how long it's been on the market. Only 81 days. So I might try to find something that's older. It's a little hard to try to go through all of these.
Well, how many days do you look for? I know Michael Zuber talks about that too. Like, what's the point when you feel like it's been on the market too long?
I don't know. For me, I would probably look at somewhere between a 120 and 180. So forward 6 months. If it's longer than 6 months, either the seller is very motivated and they haven't had the right offer, or they are completely unrealistic. And I think you'll find out.
Right.
It's not going to be somebody who's messing around. They're either their agents being nice and just throwing it up and seeing what happens, or they're motivated.
Right.
So I think anything kind of, newer than that, you run the risk that they're like, hey, we just kind of want to see what the market bears. And it's just going to cause you to have to follow up a lot. So let's see. This is the last page, I think, of Zillow. So I guess these are the older properties. Here's a 800 square foot house for 110,000. So, Steve, I don't know how well you know the market. You might, look at that address and say that's a, good area or a bad area, but I would just go all the way to the back and start calling all these.
Yeah, that's in the hood.
Yeah.
Nothing pencils out 1% rule in Jacksonville.
Nothing pencils 1% rule in the country. That's a bogus rule. You got to just forget the 1% rule.
Yeah, but it's a starting point, and anything in the hood, you're just gonna have problems, dude.
Yeah, if it pencils on the 1% rule, you don't want it.
Yeah.
I sent over the spreadsheet. AI was able to convert it.
Cool. Appreciate that.
Yeah, and Nikki, Steve, you guys will certainly have to filter through your areas, and as you talk with people and as you make offers and buy properties. But just as far as a general kind of rule of thumb, I always like to go to the last page of Zillow, the oldest listings, and just start from there. And kind of work my way, back to front, so to speak.
Okay, thank you.
Anything else? Anyone else want to?
I have a funny story.
Sure. Go ahead.
Home inspection. The buyer comes in, gets their inspector, does a home inspection. Home inspector left the bathtub running for 4 hours, forgot to turn it off. Overflowed, flooded the lower level and then the basement, and then there was artwork in the basement that got destroyed. Home inspector didn't have insurance.
I would hate to be in that lawsuit.
Sounds like a nightmare.
So your buyer decided not to offer anymore?
I'm not involved with this one. I just know the agent's involved. So you can't make this stuff up.
Wow.
But that's a homeowner's insurance claim. We'll see where it goes. But crazy stuff happens in this business.
Yeah, I heard the same thing happen in my community, actually. Like, because I bought in a brand new community from a builder in 2020, and my neighbor across the street from me, they actually pay for their own inspector to inspect the home, right? It's brand new home just built, right? And the same thing happened. The inspector left the water on for like a whole day or something. But luckily the builder was able to repair everything before they moved in.
I had left the well pump on. I've got a property up near the Canadian border, and I left it. It was up there for 2 months, froze, and then it thawed out. And then the pump just kept pumping water in. So I got up there, and I had like 3 feet of water in the basement. You could have taken a boat down there. So, all right. Well, that's all I got. I'm probably going to sign off, unless anyone else has anything else.
Awesome. Well, thanks everyone for hopping on. This is kind of the format that Craig and I do each and every week. We talk for 20, 30 minutes, do news or articles we want to discuss, and then it's kind of an open forum for whoever's here. And we'll stay the full hour. We might hop off, short, but thanks for hopping on, and please join next week.
Can I ask one more quick question?
Yep.
If you need to drop, Craig, go ahead. One of the things that's been blowing my numbers up is I've been researching this whole landlord policy thing. My rental property in Reno, Nevada, my policy is like $400 a year. And I'm seeing numbers in the Jacksonville area in Florida, like 240 a month. Does that seem wrong, off?
For insurance,
Yeah,
like
for a landlord
hurricane.
policy. For a landlord policy, do we need a landlord policy? I mean, you have to have, once you take up, if it's an investment property, if you buy it on a like DSCR loan, for example, you're essentially taking the mortgage isn't building in the insurance, is it? Or is it?
If you do it through a normal lender, they'll factor in insurance and taxes as part of your monthly payment.
Okay, so I don't have to have a landlord policy. I had my landlord policy save my ass in Reno when I had a flood event. It saved me 35 grand. When a tenant didn't report the water heater issue. So it saved me there. But do you guys carry landlord policies on your properties or not?
You should, right? The bank wouldn't give you a loan if you don't have a landlord policy.
Yeah, we don't call it landlord insurance. It's just to make sure that it covers a rental property. So landlord insurance refers to that a lot of these insurance companies won't cover you if the property's rented. So just make sure your agent is shopping for insurance that will cover you if it's rented.
Yeah, Nikki, I think it's called MP4.
Mm.
I'd never heard of the terminology before.
Hmm.
But it was blowing my numbers up, and I wasn't sure. I'm like, do I have to have this? Because that changes. I got to have that in my spreadsheet if so. Otherwise, none of my deals are. I'm gonna get into problems. Those are the things I'm trying to catch.
No. You're looking at HOA renters insurance, aren't you? HOA 4. I don't think we're talking the same thing because your rental is a townhouse, right?
I'm not talking about my Reno property. I'm talking about a single family in Jacksonville, and
Okay.
that's the
Well,
research.
if you're
The HO, go ahead.
if you're buying a property and obviously you're financing it, the bank will require you to have homeowners insurance. It's called homeowners insurance, and that covers you for hurricanes. I mean, I have that in my spreadsheet, and yeah, you can't get away with it unless you're paying cash, and then you can self-insure if you choose to. You don't have to carry it, but if you're getting a mortgage, you have to carry insurance.
That's separate from the mortgage.
I wasn't aware of another landlord
Is that
insurance.
built in or not? That's what I'm
It's the same as homeowner insurance. That's what I call it. So
No, it won't be built in. It'll be extra.
landlord policy.
Mm-hmm. That's a good question, though. I'm going to ask my agent because I was only factoring in, homeowners insurance to cover me for hurricanes and fire and flood and all that. I don't know if I need to carry a separate.
Yeah, if you get a landlord policy, it'll also cover liability. So most policies start at up like 500,000 and they go up to $1 million, or you could pay for coverage. And then they a lot of times cover lost rent. So if your place burns down, they'll cover you, a year's worth of rent. So that's, some extra features, but price wise, that probably sounds realistic. I mean, I think my cheapest insurance is maybe $120 a month, and I'm, in a non-hurricane area. So.
Okay.
Yeah, and I've had to use that insurance, and it probably saved me. I probably would have lost my Reno place if I didn't have that policy. So, because it was that bad of a water issue. But,
Wow.
Anywho, that's all I got. Until we drop off, then I'll have 10 more.
Good deal. Well, everyone, thanks for hopping on. Greg, you got anything else?
Nope, that's it.
All right. Well, we'll sign off and we'll talk with everyone next week.
Have a good one.
Thank you.
Have a good one, bye.
Bye.